Hey, what's going on, traders and investors? Thanks for checking out this video. My name is Travis from Master the Market, and in this one, I want to talk about how you can invest just $10 per day and grow that to well over $1 million using the power of compound interest and using some of the tips and strategies that we're going to talk about here in this video. So first and foremost, what is compound interest? Compound interest is when an asset's earnings are reinvested, generating additional earnings over time. In other words, it's when your profits actually make you profits by them being reinvested. When you do this, each of your profits is gradually going to get larger and larger and larger. And over the course of 10, 20, even 30 years or more, this is going to make a huge impact on the returns that you see in the market. For example, if we take a look at this chart here showing us what a $1,000 investment would look like after a 20-year period with compound interest being factored in. If we were to make 10% per year on our $1,000 investment, after the first year, we would of course have a $100 profit because 10% of $1,000 is 100. But again, the way that compound interest works is during year two, we're not only going to invest our $1,000 total investment, we're actually going to add in the $100 that we made in profit in the previous year and reinvest that. So by doing that, at the end of year two, we would then have $1,210, which means that year two we made a profit of $110. Now that extra $10 in the second year may not sound like a lot, but if you repeat this process over and over and over an extended period of time, it's going to make a huge impact on the returns that you do see in the market. So following this process over 20 years, by year 20, your single year profit would be $611.59. So by simply reinvesting your profits that you see every year and letting compound interest do its thing, your single year profit is going to go from $100 to over $600. Now, in order to show you how you can go from investing $10 per day and turn that into well over $1 million using, of course, compound interest, I want to show you this example here on the compound interest calculator. And this is going to be linked down below in the description if you want to try it out yourself. But for this example, what we're going to do is start with an initial investment of $0, and we're just going to add $10 per day, which is going to equal out to about $300 per month. Now, most of the people that watch my videos are between the ages of 20 and 30. So if you're watching this, there's a good chance you have an extended period of time to start investing and let compound interest do its thing. So for the length of time that we're going to be investing, we're going to go ahead and put 30 years with a 10% per year average return. 10% is about what the S&P 500 returns on any average year. And if you stay put through the rest of the video, I'm going to show you some tips that you can actually improve this to help you make 15, 20, even 25% or more for any average year. Okay, but by doing this, if we go ahead and click calculate, you can see that our $10 per day with 10% per year returns is going to be just under $600,000 in 30 years. And again, because of compound interest and all of your profits being reinvested, you can see that each year your return is gradually getting larger and larger and larger. And if you actually want to break this down even further and see what the year by year return is going to be, you can click on show table and it's going to break down exactly what you would have at the end of every single year. Now, $600,000 from just $10 per day being invested is a great return, but the title of this video, after all, is turning $10 per day into well over $1 million. So really the only way to do that without actually adding any extra money is going to be to improve the amount that we're able to return on any single year. So if we go from making 10% per year to just 15% per year, you can see that our $300 per month or $10 per day would be $1.5 million by the end of 30 years. And I really wanted to show this in this video because it really shows how important every single percent that you're able to make really is in the grand scheme of things with compound interest being factored in over a long period of time. Because if we go from 10% being $600,000 to 15% being $1.5 million, that is of course a huge dollar amount difference for just making 5 extra percent per year. So now the question really is, how are you able to outperform the market and actually return more than 10% per year? The first tip in order to outperform the market is going to be simply to diversify your investments. Diversifying just means that you don't have all of your eggs in one basket and you have your money put into different stocks, different ETFs, different indices, and so on and so forth. And by doing this, you're going to both minimize your risk and maximize your overall returns. For example, if we take a look at this picture here, this is the result of a study that we're comparing 4 different types of portfolios over a pretty extended period of time. We have a conservative, a balanced, a growth, and an aggressive growth portfolio. And if we look at the conservative portfolio, you can see that it's made up of 50% bonds, which are thought of as being very low risk, low reward investments, and only 14% in US stocks, which are generally thought of as being higher risk and higher reward. This type of conservative portfolio was able to, on an average year, return about 6%, with the best 12-month return being about 31% and the worst 12-month return being a loss of about 17%. If you compare that to an aggressive growth portfolio, which is made up of 60% US stocks and still 15% bonds, that type of portfolio was able to return just under 10% on an average year, with the best 12-month return being 136% and the worst 12-month return being a loss of about 60%. So you can see how much of a difference it makes to be diversified into different sectors and different types of investments. And if you take a more aggressive approach to your investing by putting a portion of your money in stocks like Apple, Tesla, Bank of America, and even Starbucks, all of which have had great returns over the past few years, which have greatly outperformed the S&P 500, that is one easy way to help yourself actually outperform the market and achieve annual returns more than 10%. Now, tip number 2 is going to be to buy the dip. Instead of just randomly or blindly buying into a stock or any kind of investment, if you only wait to buy during a dip or a pullback, that's really going to ensure that you're not chasing all the way at the highs. And by doing this, in my opinion, you can easily add 5% or more to your portfolio's average annual return. At the end of the day, the market is not going to just go straight up. Even if it's in a strong uptrend, there's still going to be dips and there's still going to be pullbacks along the way. And you can really make the most out of your investments by waiting for these dips and waiting for these pullbacks before you buy into the stock. For example, one easy way to do this is to simply look for a level of trendline support, like we see with this example here with Facebook, and only buy Facebook when it is at or near its level of trendline support. This is going to ensure that you're not buying the stock all the way up near a level of resistance right before it's about to pull back to the downside. And on top of that, it's going to help you get a lower average cost on your investment, which is going to put your investment at a safer position and is going to help you maximize your returns. Now, I actually have a video talking about buying dip and different dip buying strategies that I've already posted on my channel, so I'll go ahead and link that down below in the description if you want to learn more about how to dip buy stocks. But with that being said, that's going to be a wrap for this video. I hope you enjoyed and found some value. If you did, please make sure to give the video a like and subscribe to the channel so you don't miss out on future videos and future trading and investing lessons. And of course, if you want to learn more about day trading, swing trading, and even long-term investing, as well as have access to our market resources and our trading chat room with over 1,000 daily active traders, all of that can be found on my website, Master the Market, which is going to be linked down below in the description. But anyway, thanks again for watching. I hope you enjoyed. And until next video, good luck with your trading and good luck with your investing.